So hello guys, this side Anshuman Rao and welcome back to another video. So this video is gonna be about how I again failed my funded account. So this is the funded account right here of initial balance 50k. The initial balance was 50k, and I pretty much lost it around due to the NFP while trading NFP, and I didn't have any stop loss, I didn't have any exit plan, I didn't have any entry plan. So basically I just gambled around the way. So reason behind gambling was I just hit the daily loss criteria, which was 1%. And not the no, I'm not talking about the max daily loss criteria. I was talking about the 1% daily loss criteria, which is within my mental boundaries, within my rule book. So uh, let me show you the trade history. So I will be very clear, very much it will be clearer to explain you. So if we go into the trade history, and if we go to the, as you can see here, these are the recent trades. So yeah, these are the recent trades. Program objectives, yeah, this is the thing here, right? On the first day of trading I made about 0 point something percent, and on the fifth day I made about 1%, close to 1%. So collectively within 2 days I made about 1.3% on the account. Like in the 50k account, if we consider 1%, then it is $500. So I made about 700 $758. But on the sixth day, on the third day of trading, on sixth Friday, the loss is not acceptable and very much big. So the loss is around of $4,176. This happens due to mental, not following your rules, just gambling around. So this is what happens when you just trade against your setup and just gamble around the way. So this is, you can see the clear example of why being disciplined in trading is very much important. So without wasting any time, let's see the advanced insights. As you can see here, on the first day, winners, gross PNL, and the losers. On the first day, total number of trades was 7. Out of 7 trades, we made about total net profit of $267, out of which 2 trades were just for testing purpose, like 2 trades just because on the first day, this is the first time I'm using Alpha Capital Group. So yeah, for the first account, for the first different prop firm. So I was just executing the orders there. I was just testing out that the orders are executing smoothly or not. So if we consider 2 trades, so 7 minus 2, which is 5. So out of 5 trades we made about this much net profit. So out in the second day was pretty much within the rule book, and we respected our rule book very beautifully. So within 2 trades, like it is just one trade, we just added up some more quantity when the trade was going in our favor. So yeah, this is it. If we so yeah if we jump into the trade history now, like it's not expanding. Let me show you. Yeah, if we how many trades, like yeah, this is the trade history over here. As we can see how, like if it is in sequence wise, yeah, it is in sequence wise. So on the first trades, we know these trades were for trial purposes, and these two trades were the of this day of this day's profits were of to this 2 days. And the first day was amazing, around 1%, not 1%, like 0 point something percent was up. And on the second day we made about $491. The pretty much uh, things were really going well. But on the second day, no on the third day what happened was in the gold chart, if we will see, on the third day what happened was we faced a breakout, and the breakout was, a fake out. So due to this fake out, I lost about 1%. And the thing within me is, if I have lost the trade, if I lose the trade, which is 1%, I would have stopped. Because if after this trade I was still up $200, like in total I was around 700 something. If we do the maths, so 491 plus 267, which is $758. And if I lost 1%, which is $500, 1% of the initial balance, I was still up $258. But I didn't accept this fact, and I overtraded, I revenge traded. And this is the result of overtrading and revenge trading. And I made this $1,197 of profit during the NFP. But I again overtraded. I again overtraded that, and I messed up so badly. And there are four kinds of profits and losses. One is the good loss, one is the bad loss, and third is the good profit, and now last but not the least is the bad profit. So the worst thing out of these things is the bad profit, because this is what destroys your psychology to the extent that it's very much devastating for your trade account. Whether if you are It doesn't matter if you are trading your personal funds or your funded account. So this was something bad profit, and this was generated in NFP, just gambling NFP news. So yeah, that was pretty much it. Like simple fact that I was profiting around 0.5%, and here about 1%. So in total I profited around 1.1% or 1.23% of up. But I risked about 1%. The first mistake is, on this trade I should have risked below 1%. Like, I risked below 1%, but still then I would have risked a little bit lesser. And this is not a very big mistake, it can be rectified. But the most important thing, which goes out at the last, the most important thing is, even after this loss, I still traded, and I was just the thing. As you can see here, after this loss, I placed an order in GBPJPY, and let me tell you an interesting thing in on the chart GBPJPY of 30 minutes. Let me tell you where I placed this order. I placed this, GBPJPY order. As you can see, after this $500 loss, which was 1%, not 1%, which was below 1%. And after this loss, immediately I placed this order. Like, if we no, can we view it? No. Okay, so let me tell you where I have placed this order. I placed this order around here. My setup was, if the price comes to this zone over here, I will be placing an order for a reversal. But as you can see, this blue zone over here, which I drew this zone in the one daily time frame of GBPJPY, as you can see here, there is a major resistance over here on the daily time frame. So market is most likely, there are more probabilities for the price rejecting from this zone and continue pushing downwards. So this was the major support, major resistance. And the major resistance was in the daily time frame. So there were high probabilities that this will be, this zone will be getting respected by the market, and there were high probabilities in that, and market market did, as you can see here on the 30-minute time frame, this zone over here got broken out, and I just enter, which I cut, the zone which I cut it out now. I entered in this zone because the market was around here, okay, but the main reason behind entering this trade was I lost in the previous trade, which was this. So let me tell you guys, if you are taking a trade immediately after losing a trade, the trade which you have taken now after losing a trade, the trade which you took now, there are 90% chances that you will be losing that trade, which there are 90% chances that you will be losing again, because that trade is just like more likely to be an impulsive decision which you made after losing some of your money, and the main intention of it is making the money back that you have lost in the previous trade. So the main thing is, setup, my setup was, beautifully respected. The market respected this zone very, very beautifully, and from this zone it rejected and gave a move about the reversal trend, and gave a move about 150 pips, 150 pips, not only 150 pips, if we measure it 153 pips, okay, we can round off and tell that about 150 pips, which is a great move. And you can see there are no retracements over here. It was just a clean and sexy move, as you can see, of 150 pips. Like, if I would have waited and placed the trade here, just in this zone over here, I would have made tons and tons of money, like tons and tons of pips. We cannot say money, because it changes the whole perspective. But the amount I have lost in this trade in gold, that would have been covered very easily, and I would have also made some extra gains if I would have just waited. But the thing that comes down, like finally that comes down, is revenge trading is something, is also devastating for your account. So this GBPJPY trade was can be considered as a revenge trade, and you can see the result of a revenge trade. And I think this trade was also a useless trade. Useless trade. This was a revenge trade, and this was the useless trade. Like in my rule before, in my rule book, I already have written that if I take two losses in a row, I will just call it a day. But still, then I traded. Then after this trade over here, I got overconfident. And then the NFP candle was just going on. I placed more trades and lost many percentage of the account. And yeah, it deserved to be failed. But yeah, we got some very, very precious learnings which we cannot ignore. And I had to make a video about this, because eventually we got many learnings about myself and my brain and my psychology while trading. So yeah, when it comes to money, if you are very much focused in making money while you are in a trade, like you just have to be focused on how much pips you can capture, how much move, how big, like how bigger of a move, how like the market will give you a bigger chunk, a bigger move. You just have to be the part of that move, and you have to be planning, and you have to be targeting the to capture small chunks of that move. Like suppose, if like of a clear example of here, if the market had gave you a 150 pip move, then your target should be at least 50 pips, 60 pips to capture. You don't have to hold this trade like till here, because as you can see, it is a steep fall over here. But there, suppose in an ideal, like not in an ideal, this is an ideal case, but most probably sometimes market doesn't fall like this steep. in the, in the middle way, you will find some retracements, and in those retracements people either book partial quantities, or you know if they are confident enough, if they are more confident enough in the trade, they will add some more quantity. So it depends upon you, it depends upon your strategy, depends upon your setup, it depends upon your risk management parameters. So yeah, you just don't have to be, hold this trade a long way. If you can hold, if you can, stay patient and you can hold, then you can hold, no problem. But you can always, you can always take from the market what it's offering you. You cannot take anything from the market extra. Like, if you are thinking you will place a trade here and it will go down here and you will make money just randomly, you are planning random, capturing random moves. Like, it's just like, you want to take as much as from the market, which is, impossible and impractical to think about. So yeah, this was all for the video, guys. As you can see here, this was all the data, and the main agenda to the main, as you can see, as you can say, the main purpose to trade in this funded accounts, because if we trade in brokerage accounts, we just have a trade history. But if we trade in funded accounts, we have a whole bunch of data over here. Like, if we even fail the funded account, we still have, suppose, as you can see, this is the time expired. Okay, but let me show you a funded next account, and this is a whole bunch of another prop form. So these are the inactive accounts, the accounts which I have passed, and these are the breached accounts which I have failed. So in the future times, I can look back into these accounts, and I can, study my mistakes. I can, you know as we will jump into overview. So this is a whole, this is whole data, as you can see here. This is whole data, this all our trading, this our trading history. This, as you can see, this is the trading history, and this is the trading data over here. And if we will go into the analytics, as you can see, this is a trade growth view. Most importantly, this is the data over here. But in Alpha Capital Group, the data is even, very much in deep, in depth, in account analysis. As you can see, this is the general statistics, and this is the account analysis. So results by days, along short comparisons. Yeah, this is the account analysis section. Yeah, so this, as you can see, maintaining data is very much important in trading. Even if you are trading in demo accounts, I will not suggest you to, you know trade in brokerage demo accounts. I would rather suggest you to trade in free trial funded accounts of any prop firm. You can use Alpha Capital or Funded Next. So this was all for the video, guys. I hope you liked it and enjoyed it, and, you know and most importantly, you got to know about what mistakes I make, and hopefully you don't make them, especially revenge trading and stuff like that. And the most important thing I want to say before concluding this video is that, don't take a trade immediately after exiting a trade. Even though the trade is a winner, even though the trade is a loser, just, after exiting a trade, just wait. Whether it's 1 hour, 2 hour, or just wait, go away from the charts, just wait. Even though, in any other in other financial instrument, even if your setup is farming, after losing or winning a trade, don't place an order immediately, because that trade will be most likely to be a loser. There are high probabilities that trade will be a loser, because, either though that trade, even the trade is in your setup, but still then deep down, there are intentions within you that you are taking that trade because you wanted to make either more money, or you just wanted to, cover up the losses that you have made in the previous trade. So this is all for the video, guys. I hope you liked it, and hope you enjoyed it and learned something. So yeah, Thank you. Bye bye and peace out.